Good afternoon, everyone, and welcome to this in our final presentation for the day. I'm pleased to welcome McCranor and Dominic Guise from Cipher Risk, who are some of the UK's best insurance experts. They're going to give us a presentation around relative insurance provisions for contractors specifically. This ties into all of the discussions we've been having throughout the day and is really looking at how contractors can plan for the future uncertainties in the market, future changes to I-35, but most importantly, just planning for your own protection, financial future, and that of your families. Without further ado, I'm going to pass over to Wes to introduce himself and Dom. Just some housekeeping. There is a questions box in the panel on your dashboard. If you ask any questions throughout the webinar that you think pop up, then please do. We'll either jump onto them at the end or we'll answer them as we go through, depending on the appropriateness of wherever they place best. But without further ado, over to Wes and Dom to carry on with the conversation.
That's fantastic. Good afternoon, everybody. I hope you are doing well, and I must thank you over and above if you are sitting here listening to this, because I know it's a gorgeous day outside. So I will try and make the conversation around life cover and different things like that as painful as possible, as least painful as possible, and everyone can kind of carry on with their afternoon after. But yes, thank you to Reese and Tom and all the team at WTT. It's been a very slick process to get us involved in this. My name's Wesley McCranor. I'm the co-founder of Cipher Risk, and my recently acquired name within the business now is also Group Director of Sales, and that comes in with the recent acquisition that we've made of an advanced house screening business, which just complements our underwriting process. I think Dominic will touch on that a little bit later. But if we slip through these slides a little bit, so I've got some slides here which hopefully we can just kind of Okay, so the conversations that Reese and I and Tom, we've gone back and forth. It's been a long time coming to kind of have these conversations, but I mean, there's any number of options for a contractor to fund certain insurances through their company. A large portion of what we do is corporately funded business. We do an awful lot with the private space as well in tandem with that. I probably should just go into Cipher Risk a little bit more before I go into these products. We are a specialist protection consultancy, and we place a large emphasis on our bespoke approach to medical underwriting. If anybody listening has been through the medical underwriting process before, whether you've taken out mortgage cover or income protection or things like that in the past, you know what a painful process it can be, going back and forth with GP reports and doctors and so forth. What we've done with Cipher Risk is essentially turn that upside down, and we manage the process from start to finish. So in essence, we will guarantee the best terms in the market by using that data. Again, Dominic will touch on that a little bit later. But the contracts that are available to contractors, and the ones that we will be focusing on today mainly, are the key person insurance and relevant life insurance, mainly due to their tax efficiency and their relevance to covering the income and the turnover and essentially the lifestyle of the key people within your limited service companies. You will see on the screen I've also got personal life insurance, which are associated with the P11D benefit in kind. I didn't include all of the types of contract that would sit under that, but that would include personal life insurance, critical illness, and income protection, which you can fund via the company for the benefit of your personal estate. And that it would just be a benefit in kind because you're obviously benefiting from that outside the business. So there is a conversation to be had there further, whether or not you want to be covering the business or you want to be covering yourself. And then you've got loan protection. Loan protection pretty much does what it says on the tin. If your limited company has any liabilities, whether it's an overdraft facility, a loan facility, and anything else that could be kind of liable for the business, you could put something in place to cover that as well. So you've got a number of options there, but I think the idea is here to address the fact that having a limited company, you've got a legal entity that can fund these types of insurances for yourself and outside the business. And I think that's what we're going to focus on here. This next slide, I'm not here to teach you to suck eggs. I'm sure you hear it time and time again. I thought it was just relevant to kind of point out because it is kind of what we're discussing today. But as you well know, as a contractor, you don't get to enjoy those benefits that most employees do, i.e. the subsidized health, the life, the disability, and then the retirement benefits. And I think this was put in a really good way that it's almost the hidden paycheck from an employee because it's just kind of locked into the group scheme piece. But that's something I took away from the FT the other day. It was a very relevant comment here, but contractors earn more money than employees do, and it's that simple for the most part. But the one part that you can kind of mitigate along with the advice from the other people today, as well as then this, is the sick pay element. Ultimately, I think it's a mindset switch that I've dealt with any number of contractors over the years of putting different insurances in place by the company. And it's just taking the mindset of saying, okay, rather than I've got a service company as a mechanism to get paid via my contracting work, I'm a business owner. And then just start focusing it on as that way. And I think it's the same concept as a larger company, or whether it's a one-man band or a large company. The sick pay element really is the kind of the linchpin here, and it's what more of an apt timing to discuss it when most of us have been dealing with what we've been dealing with recently. Ultimately, large employers and all alike probably take out an element of this insurance at an average level of risk to cover the sick pay for their employees anyway. Ultimately, if somebody, heaven forbid, is ill and they're pulled away from the business, they're going to claim on that policy to then just kind of subsidize the income they've got to keep paying out on that as well. And I think what we want to address today is that's relevant to everybody here as well. And the tax efficiency is there as well for the company owner. So the key we'll be looking at is the life and the critical illness element here. Just waiting for this slide to load up here. Okay, so the first point of call here, and I will, the key person part is quite a part I'm quite passionate for me about, because it's a question that you ask yourself. I mean, as a limited company owner, whether you're within a large institution, whether you are working on a construction site, whatever it may be, I think the rhetorical question here is, within your limited company, who is the key person? And more times than not, it's always going to be you. And I think that's the one that we're going to address here, to say, okay, look, you're the person that's got the skill, the knowledge, the expertise, and the leadership all kind of rolled into one. And the company is heavily reliant on that, to generate its income. The key person insurance, also called key man insurance, as we can see here, I mean, it's an important part of this planning process, and there is no physical legal definition, but in general, it is described as an insurance contract taken out by a business to compensate the business for financial losses that would arise from death, extended incapacity of a person, a member of the business. So one thing I would always point out when you look at this is, as well as the business, while we're addressing the need of the business, I think it's probably fair to say that as a business owner myself as well, our personal lifestyles will also be impacted by not being able to fulfill our duties with our limited companies. So whether it's a contract or run of the business, so it's taken in consideration to that, to say, okay, look, if I'm away from the business, how long could I sustain being away from the business before it's going to not only have a negative impact on the business's turnover, but also my take-home turnover as well, which will obviously be a part salary, part dividend. So when we go on and we look at this, I mean, the key person insurance, again, is determined as people, owner, manager, sales manager, research, and everybody else below. And I think it's everybody here within their own service companies are all of those wound up into one. So what we forgot here, if we continue to go on, I've got how this policy is structured. Now, so one important thing to take away from this is that an insurance contract is an insurance contract. That's the all and be all of it. But the owner is the way that it changes. So if you had a personal policy and you paid it out of your back pocket, it's the same contract that's going to be in place as a key person policy, albeit in this instance, it's owned and paid for by the company for the benefit of the company. the way we would structure this is everybody here knows what their own company metrics are and what your day rate is, or your 6-month or your 12-month fixed term contract. But the level of cover we would then look at would be established by that and your annual turnover. Now, internally with Cipher, we've always worked on about a 2-year turnover metric. That's come from many years of dealing with, whether it's been large companies, investment-backed companies, as small as the contracting companies. 2 years is a pretty good number to look at, because ultimately, if you're out of the business for 6, 8, 12 months, you've managed to kind of weather that storm, but at the same time, personal lifestyle is taken care of, and the business is still kind of ticking along as it would. Ultimately, if someone have been out of the business for longer than 2 years, I think the statistics show that it's more than likely going to be rolled up. So the 2-year number is where we really kind of tend to look for. It protects the company, as we've mentioned, and it ensures there's cash for business continuity purposes should a key person pass away or become critically ill. Now, I want to point out on this point here is that I'm really focusing on the critical illness point. The life element, and I know there's been view from the revenue in different ways this contract's set up, and we would obviously have that conversation whether it's the best to go through the business, or is it better to pay it through the business but benefit from it personally. It's really what we're trying to achieve there, because the view that's been taken previously from the revenue as well, if a key person of a limited service company were to pass away, well, there is no longer a business, so you're not actually covering a key person. That the critical illness element is something that we always focus on, because that is the one that's close to home. Ultimately, that's the one that it's going to have impact on personal lifestyle, and you're actually going to receive the benefit from it. The way a key man policy is usually set up is on a term of 5 to 10 years. Now, this is the historic way that it's always been done. There are some rules in the background which were brought out, which are called the Anderson rules. And the way a key man policy, key person policy was originally designed, it was required to be a short-term policy, which ideally should be 5 years to 10 years. Now, it's not so relevant in the conversation we're having here, because the next bullet point there addresses why it needs to be 5 to 10 years. And the only reason you really go for a short-term policy is to satisfy those Anderson rules. And the Anderson rules are there to allow tax relief on the premiums of a key person policy. Now, I would advise from our side, we do not, and I can pretty much say I've never advised one of my clients to claim relief on their key person policy premiums. The reason for that being is there is always going to be tax in some element of the contract, and I would much prefer my client to pay tax out of the business on the premium as opposed to a large payout. So I think it's just food for thought, and that's another point that we would obviously need to address if we were going to go down the route of having the key person policy in place, or were we going to fund it for the benefit of outside the estate. Now, in the event of a claim, there will be a lump sum benefit paid tax-free into the business. So the structure of the policy, there's not many contracts out there that are critical illness only. There are a few, but in terms of cost value and the way that it is structured, they are usually based on a life or earlier critical illness. So basically, if you were to suffer from a critical illness of a specified illness within the contract, that cash lump sum will be issued into the business, and the policy would cease at that point in time because you've had a payment of the earlier critical illness. If you do not have that, then the life element is still there and it kicks in. But again, I would like us to focus on the critical illness element for the sake of a business continuity and personal lifestyle continuity through the business. So we'll go on to the next slide here. Okay, we could talk all day about key man insurance, I must say. So I mean, obviously I'm conscious of everybody's time. So any questions you've got on that, please put on the right side, and we'll answer them as and when we can after the presentation. Relevant life insurance. I think I'll just probably cut to the chase before I go into this. it is essentially the most tax efficient product in the life space for cover. You can provide the way to look at this type of policy is that if you've been employed before, as I'm sure you have, you'll remember a 4 to 5 to 10 times remuneration death in service policy, and the way that is usually structured, and because it's so affordable for a company to issue that to everybody within the business, is because there's a group, and there's a large group, and the larger the group, the more cost effective it is for the company, and based on your hierarchy within the business will depend on how much of that multiple you're going to get. You'll also know that as a limited service company, you're too small to qualify for a group scheme. I mean, I think the minimum out there is 3, but it's much better to go down this route anyway. 1, because of tax efficiency, but 2, because of its flexibility and its portability. The idea, and this is very much a personal policy that's funded via the company in a tax efficient manner, but the way to look at this, and any life contract for that matter, is if it's done right the first time, it probably shouldn't be done again. And I think that's the note we take away with all of our clients when we look at a relevant life contract. If you've got cover outside the business already that you're paying for, it's more than likely going to be more cost effective to feed it through the business, and that's due to the tax reliefs that are available on a relevant life policy. So if I just run through this slide and just kind of duck these points off of here, but it's a tax efficient way of providing life insurance for company directors. As you can see, it's particularly popular with contractors who work through their own limited company. If the individual passes away, the policy pays out a tax-free cash lump sum into your personal estate. So it is structured as a death in service policy. So the way it is set up is the premiums are paid for the company and they are classed as an allowable expense. Savings on the relevant life policy compared to a personal policy, as you can imagine, are almost 50% thanks to those tax reliefs. Now, in some instances, depending on where one's tax banding sits, it can get up to about 57, almost 60% cheaper than what it would be outside the business. So it's just food for thought of saying, if I've got cover, if I need to provide myself cover, whether it's mortgage cover or cover for family or dependents, it's definitely the way to go if you've got a limited company. It's not subject to income tax or national insurance contributions, as you can imagine. It's not coming out of the business. It's going directly through from the company. The company is taking out the policy on yourself as a director of the business. And from the outset of the policy, it's going to be set up into a discretionary trust. Now, the discretionary trust will hold that policy. So for one, that's where it kind of sits within the pensions provisions that have allowed this sort of policy to be brought to market. If my memory serves me well, I think it's been since about 2004 since this has been accessible, but the uptake on it has been phenomenal, as you can imagine. There was a contract 2 or 3 years ago which we were great fans of, and it did have a critical illness element attached to it. As you can imagine, the last key man policy that we've just discussed, if you could wrap that benefit of the critical illness element into a relevant life contract, and it's an allowable expense, and it doesn't form part of your lifetime allowance or your estate, you can imagine the uptake on that. Unfortunately, the revenue came back and didn't quite agree with the insurer finally. But again, that there is a contract similar to that still available, but not quite as attractive. But to nail down on these points here, the benefit is paid out tax-free and does not form part of one's estate for inheritance tax purposes, thanks to that discretionary trust which holds the policy. Now, a key point to think about on this, and the next slide will show us that you can take this policy out until the age of 75. Now, I think most of us, I don't mean the pensions age, but I think most of us would like to retire before 75. But what you can do, and if your circumstances change, the policy is portable. So whilst you're paying through the company now, and we say, okay, look, we're going to lock the term in to 75, the idea behind that is a level guaranteed premium policy is never going to be cheaper than the day you take it out. Every day we get older, the premium is going up. Mortality rates and morbidity rates are changing continuously in the background, and thanks to this current pandemic that we're dealing with, it's making for an interesting time for a life insurance underwriting, as I'm sure you can imagine. But the idea being is when you take out a contract like this, or any contract which you've put in outside the business as well, if it's done in the correct way, it should not be done again unless you've got requirements at a later stage for estate planning and so forth. But the reason we would always advise this to take it to 75, you may not be operating under your service company until age 75, or you may actually go back to an employed position at some point. The flexibility of this policy allows you, one, you can take it with you to a new employer and kindly ask them to continue funding it for you. If you set up a new limited company, you can just simply move it across from the deed of assignment within the trust, and you can fund it continually through that business. And if you end up closing the business down completely, you can then take over the premiums personally. But the idea behind that is that you've obviously got a guaranteed premium when you've kind of ridden the wave of the tax efficiency along the way. I've just lost the screen here, so if you give me 2 seconds. Okay, we're back. So yeah, one key point to remember on this, based on the level of cover, is you can get up to 25 times your remuneration. So that's not necessarily salary. You can include your salary and dividends. We've been known to even put certain policies in place if the company owes you a certain amount of money in some instances. So if you look at that, it's quite a substantial sum that you can put in this sort of contract and feed it through the business. So again, this is the most tax efficient way to provide yourself personal life cover outside the business. And one other point to note on it as well, I know a lot of people will have their spouse as part of their limited company. As them being part of the company, those two are allowed to benefit from a contract like this. So if you do have personal cover outside the business, it's probably worthwhile exploring, can you now put it through the business and save a bit of premium on that? Go to the next slide here. So I've got an example here just to give you a bit of context as to how that saving really comes in. I've chosen a monthly policy premium of about £200. It's a pretty standard amount for a life contract without the critical illness side of things. But if you look at the taxation associated with the relevant life as opposed to the non-relevant life, it pretty much paints a picture. You can see there ultimately with the tax associated with a £200 a month premium, it's actually costing £313. If you go the other side and you put it through a relevant life plan, there is no cost to the employee. The employer is paying the full premium, but once you've managed to get to your allowable expense to your corporation tax, you're actually paying £160 for a £200 a month policy. So it's a good example to kind of really hit home, and that will work across all metrics. I alluded earlier to our process. I think it's probably a good time, and I hope I didn't rush through that too much. If you do have any questions on those, we will open the questions up, and I know that the gentleman at WTT will circulate things, and we can pick up the conversation later. I know it's a lot to take in the space of 15-20 minutes, but I would like Dominic to now go through how we use our unique underwriting process to ascertain the best terms in the market on these contracts. And the reason we do that, and I know Dominic will touch on it, is it's important to recognize that every insurance company in the country has a different philosophy on underwriting. If you look at an Aviva, or you look at the Scottish Widows, or you look at an AIG, they all have their own philosophies and treaties within reinsurance companies. So it is very, very important to make sure that you've just kind of had a look and you've made sure that everybody's seen the medical profile before you go down the route of taking an insurance company. But I'll leave that to Dominic to go into with a bit more detail.
Yeah, thank you very much there, Wes, and good afternoon all. As Wes mentioned, I'll be taking over to the next stage of this. My position in the company is obviously co-founder director along with Wesley. I'm also group operations, so oversight, and within that is mainly underwriting. So I'll touch base a few key points on this. It's one of those things where, you know, people thinking about insurance and they finally got to that stage where they feel that, you know, they're in the place they need it and they see the importance of it, and then they usually fall into the stumbling trap of underwriting, which unfortunately is probably the biggest barrier to obtaining this kind of cover, this type of insurance. It is you're wholly down to the decision of the insurance company, and as Wes quite rightly mentioned, each insurance company has a very different view on risk. So Cipher came in when we set the company up. We reversed engineered the process of how insurance is applied for. Traditionally, an application would go into the insurance company with a number of medical questions on there, and then the insurance company from that point onwards would then go out, write to your doctor, get any information they need, medical information, send you for a medical, etc., etc. And then that insurance company would then make a decision based on your risk profile. So this is more pertinent now because of the pandemic. It was important pre the pandemic, as Cipher is known all too well with the amount of lives that we come across that feel that they're absolutely fine, they've got no risk at all, they're very healthy, they're good weight, etc. But there can be a number of things in your GP report, including inaccuracies from a GP, that can then hinder your progress through to application. So effectively, Cipher created what we call the OneLife process, which is a way to really try and understand how we go about dealing with you as a client and understanding what we need from you to get the best terms we can from the insurers. And that process effectively is 5 points, and it's all about data collation and controlling the data, and most importantly, owning the data with you, the client, and us. And by doing that, we're able to really guide the outcome to the best outcome possible. So if I give you an example, quite often a GP report would have an instance, say 3 years ago, you might have been going through a bit of stress, there might have been a few issues, you go to the GP, and you mention this to him, and you go into detail with the GP why you're under stress and what they recommend. But unfortunately, GP reports don't note that detail. And when the insurance company get that GP report, they look at that and they go, okay, we see it was an element of stress 3 years ago, and you were prescribed something to help with that. An insurance company is more than likely to penalize you for that, which is unfair in every instance, because there's always context to these things. So what we do is we collate the data, we risk assess it, and we add the context around the issues, if any, within that information. And by adding that context, we get a much broader picture, which we're able to negotiate with insurance underwriters based on that information. And critically, we send the information through on an anonymized basis. So that means you're protected as an individual. So the insurance company don't log your information, as they usually will always log it, place it into their black books, etc. So if you were to have a negative outcome and you weren't able to obtain the cover, or the cover was loaded by a substantial amount, you then reapply 12, 24 months later, there's a very high chance the insurance company would look back at that and go, you've already been through here. Oh, what were these issues last time? And again, you then fall into that stumbling trap. So we mitigate a lot of these problems by controlling the data, understanding it with you, the client, and risk assessing it. And being able to risk assess it gives us the option then, before we've even spoken to an insurance company, to either sort these issues out within the GP report or a latest medical. It could be a blood panel that came back and the cholesterol could be raised, or you could have had high blood pressure. And it's important to note that pre-COVID, that insurance underwriting has been scrutinized more than ever, given that the most high-risk categories were diabetes and high blood pressure. So if anyone is to have high blood pressure and they may not be aware of it, or they have had high blood pressure in the past, it is going to cause significant issues in obtaining any form of cover. But there's lots of ways to mitigate that, and that's by working with us and your doctor and various medical companies we have, and we're able to ascertain the best pathway to, i.e., bring those issues down, or mitigate the blood pressure issue as an example. So Wes mentioned earlier on at the beginning of the call, Cipher have just acquired an advanced health screening business, and that's really opened up a lot of avenue for us in terms of being able to not pass the buck. We found a lot of issues inherently of insurance brokers, if they have had one of their clients has had a medical issue, is who do they go to, what do they do? So with us, with being able to have an advanced health screening company, which has an extremely renowned medical board with it, they have number one, they have good inroads into top institutions in London as well as the country. We've got clinics up in Wilmslow and further north up to Newcastle. And within those clinics, we're able to get very quick response to deal with any issues if anything was found within medical data. So that's twofold. Number one, most importantly, you as an individual is taken care of, and any problems are found are acted on and mitigated. And secondly, it will ensure, hopefully, that we can get the insurance through based on the new data we obtain of any issue found. So the OneLife process encompasses all of that. As you see on the screen, there's two stages: there's Cipher Risk and there's Cipher Advanced Health, which is our advanced health piece. Both of those tie in very closely together. And the Advanced Health also has its own subsidiary where we can have a health membership subscription as well, which obviously ties in very well. Because one thing a lot of people haven't quite realized is just how close insurance, life insurance, critical illness insurance, and health, they run in tandem. And not everyone makes the connection, but it's what Cipher here to do, to really allow people to see, okay, I can see where my health, my individual health, plays a huge part on the insurance I want to apply for. And also to note, if you already have insurance and you've had a health issue, i.e. you were loaded for family history, or that's a very common one. Again, I'll come back to the high blood pressure, diabetes, very common reasons for why insurance contracts are loaded. We can look at those, we can go back, look at the data, and in a lot of instances remove those loadings, which ultimately saves money in the long run. So there's lots of angles as to why the OneLife process works and helps, not just in new cases, but also in current policies in place. Now, a lot of you may be looking at policies you already have, and a lot of people have, but the COVID has created that, has made us much more aware of what we actually have in place, what it is we are doing. And people are starting to recognize, how much cover do I have? Do I have enough? Or am I paying too much for it? These are all the questions which we're starting to see a lot of coming across, and people asking these and looking more detailed what policies they have in place. So in terms, to wrap up the OneLife area, that it is an all-encompassing, health journey, health process. How much you want to take from it is up to you. In terms of the basic underwriting for insurance purposes, there is a bare minimum in terms of medical information we will need, and to also highlight medical policies. The amount of cover you're looking for is driven by the medical data. So naturally, goes to say large amounts of insurance will need sizable amounts of medical data. So there's something obviously Cipher's fully arranges, takes care of, and yeah. So moving on. Sorry, I'm just waiting for the slide. There we go. The key points to take away from this really is looking at yourself and where can Cipher help you. And really, what is a trigger point for people to look down? They have, to finally realize we're in a situation which has brought mortality the closest it's been in 85 years. We are at risk. We always have been, but this has highlighted that. Let's look and see where we are and where am I covered and where do I need to get covered. So it's really a takeaway point from there. And as Wes highlighted, some of the products that we have or sell are very, they're aimed very much for the contractor market, which, if I'm honest, from speaking with Reese and Thomas over the years, is a market sector that doesn't get the attention it should. And that's where, I commend WTT for bringing this to a light and allowing, Cipher, Wes and myself to come and speak and, give people the options, because a lot of people we talk to just say we don't see this. We don't see this as an option. No one talks to us about it. Most of insurance is not sold in enough because the right people aren't talking about it, and it's usually handled by mortgage brokers or your IFA, and they prefer to focus on more exciting things, they would say, i.e. pensions and investments. So we're here for you guys to come and talk to us. We're here to answer any questions you have. And I will leave it at that.
Fantastic. Thank you, chaps. That was a brilliant presentation on a, as you say, kind of underexposed area of planning, both life planning, tax planning, and just sensible planning for the future. As you correctly point, I think it's invariably the case when we're talking about tax planning with contractors, or just life planning, wealth planning, whatever you want to call it, this is an area which is just simply unknown. And from what you've said there, the benefits on both protecting your family, protecting your own income, protecting your kind of lifestyle moving forward are so easily attained through processes like OneLife that it seems foolish not to consider it at the very least. I think that's a really, really useful presentation that you put there to support that. We do have one question. It's slightly tax driven, so I will phrase it in a way that hopefully you'll be able to kind of interpret and comment on. As you well know, the IR35 changes are about to come in year, and what we might see therefore is contractors who have short-term contracts, perhaps 6 months to 12 months, operating on an inside IR35 basis and then flipping to an outside IR35 basis. So for the purposes of that, they will keep their personal services company, and the PSC will operate on the outside IR35 basis, so the money will be coming through there for that. And then when it's on an outside IR35, inside IR35 basis, it may be that a case that an umbrella employs them directly, or indeed that they take the money directly from them, still maybe through the PSC. But in terms of that, how important is where the money is coming from? How important is it that the income continues to come through the PSC rather than directly as an employee?
I think I could take that. I mean, really, it really depends on the product, Reese, to be honest with you, and how we've structured it and what we're trying to achieve by the product. If we were looking from the PSC to say, okay, look, we're going to be putting the key man policy in place or something like that, I would feel more comfortable if we were not taking money through that anymore, to potentially switch it over to start paying it personally. Just purely to make sure that we're not kind of breaching anything, and we're putting it through a company that's perhaps not generating the revenue it was. The relevant life side of things, ultimately, I think if we've satisfied the multiple of remuneration at the outset, if that remuneration changes for any reason, I mean, it's a pretty natural process that's going to happen. So I wouldn't be too concerned about it that way, and I would continue funding it as long as there was money going through the PSC to fund the relevant life policy. I don't see that being a problem. But I think it's just an ongoing, it is just a matter of saying, okay, look, if we are going to switch things, let's just make sure we're doing the right thing and making sure that it's being funded in the correct way.
Fantastic.
Hopefully that answered your question.
Yeah. I think touching on that, I think it's an important provision. I mean, this is kind of what we're saying over the course of these presentations, is that the planning around for contractors is really, really important, and where contractors perhaps haven't planned their kind of financial futures in the past, we really are championing doing that going forward. And it's especially in light of things like IR35 changes and reforms that make an ever increasing need for that. And so I think where you can plan and where you can have a PSC that remains valuable in light of the IR35 reforms and changes, I think that's an important thing to do. So I'm still of the belief that IR35 will drive some decisions, but I have an overriding belief that where you can plan the future based on kind of your financial protection and your family's protection and protection of your family, that's a more important factor to look at. And here we're talking about long-term life planning, which remains so important. And I think that's exactly what Wes and Dom have kind of touched on here, is that yes, contractors may flip between contracts and may have different incomes and different expenses at different points, but if you can continue the overall planning of life planning, then you have an ability to react to those changes as and when. And as Wes said, if that results in a slight adjustment in the contract or the policy, then that's the right thing to do. But it's only having brokers and help from the likes of Cipher that you can really do that. And I think that's where you guys are coming at it from, is much more an advisory position rather than selling insurance products. I think you'd agree with me on that.
Well, I think you're absolutely right. I mean, ultimately, as you just said, I mean, the need for the cover is what we're putting it there. And I think the first question I ask every one of my clients is, what are we trying to achieve by this being in place? We're not just buying a contract because we enjoy buying life contracts. So I think it's a matter of, as you just said, it's the tax efficiency of having a PSE to fund it, or whether it's coming out the back pocket, or how you fund that. I think the need needs to underpin that, and that's going to be the kind of driving force as to why it's there. Once it's there, you know, we can enjoy the tax efficiency of putting it through the company while it's there. But you're absolutely right. I think it needs to be, what are we trying to achieve by it being there? How it's funded is you know, arbitrary, really, at the end of the day.
Yeah, fantastic. Okay, well, unless there's any other burning questions from any other members of the audience, we can leave it there. Obviously, it goes without saying, Wes and Dom can be contacted directly. We have an ongoing relationship with Wes and Dom in terms of our clients, working with Wes and Dom to find relevant insurance policies for our clients based on their own tax considerations and their own tax status. So if you want us to be involved in that process, feel free to just drop us a line and we'll put you in touch with Wes and Dom, and we'll start having those discussions as soon as possible. Other than that, all that remains for me to say is thank you ever so much to Wes and Dom for a very informative presentation.
Thank you.
That was great. And we'll hopefully see you again on another presentation. In the meantime, thank you everyone else for attending. It's a pleasure to speak with you all, and we'll see you another day. Thanks all.
Absolute pleasure. Thank you again.
All the best. Take care, everyone.